Okay, welcome everybody. We are Friday the 8th of October 2021 and it is NFP Day. It's NFP Day. So what we've seen this week is really we've seen the lows and we've seen the highs, and let's just look at the SPOs in an example here. So really we kicked off Monday on the lows. I'll just get this up. Kicked off Monday really down on the lows here, and then really snatching back all of that negativity that we saw the prior week. And so here we are sitting promptly above the 20 EMA on SPOs. Really impressive last 2 days of trade, to be fair. Very nice fluid trading yesterday on the longs. Um, just want to, could I get a Y in the chat room if you can hear me, please, in Discord? And thanks, Mike. So yeah, we're really, looking at these markets after the pullback, right? There's been a lot of commentary with regards to, there's a 10% correction off the highs. And so as we come down here, I mean, really, we've only bottomed out at what is this, like 6.17 pullback, the lows of last week, right? And really the 10% is actually going to put us somewhere like down around here, right? The 40 80s on the SPOs. Now, I just want to frame the market in the context of that sort of rhetoric of uh, Morgan Stanley, Goldman Sachs, and all the boys and girls really talking about those 10% pullbacks. We didn't get it. We got a 6% pullback, all right, so far. And so, um, in the context of these markets, for those of you who are trading with us daily, you'd be familiar with a lot of these lines that we have on each chart. Of course, the SPOs as an example here, these are key significant weekly high and low areas of support and resistance on the thick blue lines, and they're overlaid onto our SPOs 60-minute chart in the center. So you got dailies or weeklies for the big time frame, and you get those 60-minute charts on the spread panel here. All right, so really let's look at NFP, right? Because just in a general sense, the expectation here is 500,000. All right, really, when I was out and about earlier, there was somebody on Bloomberg talking about a zero. All right, a zero beat or a zero miss. Okay, now I don't know about that as a potential probability for today's reading. What I do know is that we've had a surprise beat on the ADP figures during the week. Initial jobless claims coming in slightly weak. So generally things looking good, right, in terms of the jobs sector. But we have had shockers. Um, we have had shockers so far over the last couple of months with non-farm payroll. So very hard to take something as given with any of these economic data events. For me, really, the commentary is that if there is a satisfactory report, the FOMC are going to maintain scaling back their bond purchasing program from the 120 billion a month in asset purchases. Right, they're going to scale it back. If we just, I think, there's some figures of what is a moderately decent number. I think that's about probably 380 to 400,000. I think that's fine. I think if it's like 200,000, I don't know if that's moderately good. I mean, if look, if it's a zero, that is not good. And so I want to flesh out and contextualize some of these numbers that we might get. All right. If we get 500 in line, for me, right, if that's indicative that the Fed are going to scale back on a moderately half decent number, um, well, if we get in line, well, that's a surety then that they are going to at their next meeting, um, in November, they're going to go for the scaling back. All right, and so therefore that's sort of an equities down situation. Okay, so it's good data, bad for stocks. I think that's going to be strong for dollar. If we come in here with something lower than 200,000, I think that's the sort of number where the market will actually stay buoyant, and continue to look for further upside on these markets. I mean, technically, it's very easy to see how we could have that right now. I mean, we're on Nasdaq below the 50 EMA. I think we could push to that, and then the buyers it's their job to get us up above there, And if we have a really bad data reading, a bad report that the economy and the job situation is not improving really to the tune of what the FOMC would like, the Fed would like, then QE may be extended and we may not have a large adjustment on the purchasing program come the November meeting, right? So really, bad reading, good for stocks. This is how I'm seeing it. Bad reading, good for stocks. Good reading, uh, sorry, yeah, good reading, bad for stocks. Bad reading, sorry, good reading, good reading is not good. We go down. I think I'll be looking for the short side. Bad reading, I think that's enough to keep the QE train rolling, maybe for another month or two, and bring us into 2022. All right, with the program unchanged. That's how I see it. I think a good reading here. Given that they're going to be online to reduce the asset purchasing, we may see the dollar move up on that. A bad reading, more QE. I think we're going to see, a little bit more dilutive on the Dixie, and I think we could go down. Gold, I don't want to trade on gold. I don't. I'm not looking for gold. I hope one of you guys or girls, has a good read on it, likes gold, has been enjoying gold. It's just not my trade at the moment. So I think for oil, it doesn't really care. It doesn't really care at all. Never has done, to be honest. There is a gap here on oil on my charts that I am mindful may trade out. So, but at the moment, it is quite bullishly held well, pretty much above the 70, well, just at around the 78, 79, high 78s and 79 handle. Um, that's really it. Now, remember, you don't have to trade this number. You don't have to trade this. Okay, no one's holding a gun to your head. Um, it's really, unless you see a trade that's screaming at you, I wouldn't really be jumping in on this number at all. I never have really been jumping at this number uh in my whole career, to be honest. So let's look at some of these markets. Right, let's look at some of these markets. Nasdaq, given that we're just holding below the 50 here, if we have a really good beat number, yeah, I am talking about downside for equities. We had the beat on ADP, and it was enough to drag us to the upside. So maybe nothing. These stocks are Teflon. So again, I'm in two minds as to what I think about a good number, and I'm actually now going to have to rein myself in and remember contextually that we did have a beat on ADP, and it was positive for stocks. There was no appetite for the downside, as you can see. So actually, I'm going with a good number. I think we go up, and a bad number. I think we go up even harder. I don't think anything's going to take these markets down at this time. Um, I am 80% technical, 20% fundamental. So really, I don't see it as prudent as a trader for me to try and forecast what the market's going to do on a number, because take it from me, I seen a build on 20 million on DOE and the market went up. So everything can be complete dog food when it comes down to it. So there you go. All right, I'm gonna come off the mic with 4 minutes to go. Any questions or queries? Hit me up. Hit me up. We're all live here in the Discord room. Yeah, speaking out, forever hold your peace. The trader room is live for anyone in the trader chat who wants to chat in there. But I don't think any of those guys are actually trading this number at the moment. All right, so we're coming up on just under 4 minutes for the number for the data. I'll be running the Squawk audio over this, and I won't be talking unless I see something jumping out in the market. Yeah, read if you okay, if people want the squawk or want my voice, it's Y for me, N for the squawk. Punch in your votes right now. Y for me, N for the squawk as a binary decision. I think it is. I think it is more prudent to have the squawk with me jumping in with it. Although it can be quite. I know what you mean. If you don't want the squawk, you have a squawk there, yeah. I think it is prudent to have the squawk. It is a bit busy though. It is a bit busy. I'll let the squawk just release the main number, and then I'll cut him within like once we get the main number. How about that? All right, I've got the squawk open live now, so we should be hearing from him in a minute. All right, coming up on 10 seconds. Just remember this range we have in SPOOs. All right, here we go. Unbelievable, unbelievable. Miss 194,000, well below the 500,000. That is not a reasonable number for the Fed. That is not reasonable. Dollar's gone. Yeah, you're seeing two-way action here on equities. Not really knowing what to make of this, and I don't blame them to be honest, because now you're looking at the Fed really not getting the number they're looking for, okay? And we're looking at them not then taking action in November. And then therefore, I think we should be going up. This is actually this is really actually one of the quietest NFPs I've ever traded. Okay, wages have been ticking up. Hours are up. Work week hours are up. 34.8 from 34.7. Unemployment rate 4.8% versus 5.1. The employment data in the States just it really doesn't make it's actually one of the worst data figures, really, to be honest, because they have so many unemployed that aren't even accounted for in these figures. I mean, I'm holding shorts here on equities because I don't like the reaction that we had on that number. I'm just reacting to what I'm seeing. Be aware of that 50 EMA there. This is a very, very tame response to the data. Nat gas giving up an area that it was holding for well, last couple of hours. No new lows on day though, nat gas. Okay, so am I speechless? I don't know. Am I speechless? Gold, yeah, look at that. Dollar down, bonds up, yield down, gold up. Cable, yeah, taking a bit of that Dixie weakness. Let's look at the Dixie here. So another push down on this thing on the week is going to be significant. Yeah, it's just okay, nice, Matt. Lovely. Lovely. Oh, lovely. Yeah, so well, yeah, I'm not gonna get into any instructions on managing trades. You got the 50 EMA up there, obviously. Matt's in a trade on on the Nasdaq. I mean, if you're in the mood for swinging there, Matt, you're in a good spot. You're in a good spot there, buddy. It's risk reward wise on the pivot, it should be getting about 3.74 to 1 at the moment on well, oh wow, that's 94 ticks of risk. You probably don't have that risk profile, but even on 40 ticks of risk, that's about well, currently it's sitting at, well, it hit into on the target 14,987s at almost 10 to 1. 41 ticks of risk off the pivot. That's what you want. Give me one of them every day for breakfast, please. Just in a hedge position on some equities here, just until something snaps. So I mean, what does this mean for policy? I think the Fed can kind of really step down on their concept to have, well, certainly heavy asset purchasing reduction in November. Whether they opt for like a Christine Lagarde strategy where it's a dovish taper, that I think is most probably still on the cards. It hasn't been that bad a number. Uh, I think, yeah, I was saying 200,000, between 200,000 and 350 was kind of a gray area for me. Um, I still don't think it's that bad a number. I think the Fed could probably come in with a small tippy toe of a reduction in November. But the question is, what's the market going to price in right now? Really, that's the only question. What is the market going to price in over this? Um, so from a technical perspective, really from Thursday, yesterday's highs, and then this overnight sort of drift and a pullback, uh, really, it is a pullback, and we have pushed up, and we're just tapping the 14,987s right now in the Nasdaq. It is a hell of a resistance level, I will say that. I still think people who are buying put protection up here and here, still don't think they're sweating their puts right now. So I think the largest traders are more than happy to let this market drift back. Got my long hedges here. Gold pushing up above trend. $50 EMA above 1803 spot 4 is on gold. Let's just revisit the gold chart. This is the weekly. You got the high of the week of the 20th of Sep, 1788. It's just below that 50 EMA. Excuse me. And then really above there, like, oh yeah, there's a bit of a notch of an area here from like that high to that's a problem area for gold right there. Nasdaq coming back. To my mind, we haven't had the reaction to this NFP yet. It's been very quiet. Oil's looking pretty nice actually there. Look at the push on oil, 79.24s. Yeah, that's pretty black and white read. Yeah, if we make new lows, we're going to see major capitulation. If they do need to buy this, yeah. Treasuries are a shit show, and gold is certainly not paying attention. Gold just is taking the nod from the Dixie. Quite tempted to take a position on that gas, but it's a shit show. It's just kind of worked in a tighter range all the way through to this number. Okay, so just going to cut the recording here. We've had enough of this figure. We're sort of setting into this lull on the pre now, just looking towards, the open in the US in about 37 minutes. Great. Thanks for tuning in.